And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Friday, September the 3rd. Happy Friday, everyone. My name is John Hoagland. As always, thanks for trusting me with your time this morning. Lots of new and important information this morning, but always we are going to be focusing on context, good risk management, and infinite patience. And on mornings like today, I find that infinite patience is hard to come by, but even more important. Again, the market is treating you well this morning. We're happy about that. This morning, 7:30, the unemployment numbers came out. Unemployment came out at 5.2% as expected, dropping from 5.4%. Where the shocker is the non-farm payrolls. They were looking for 750,000, only 235,000. So there is a little bit of a downside tilt to that as traders and investors digest that information this morning. We're going to find out a lot more throughout the day how they were liking these numbers this morning. Also, 9 o'clock this morning, the ISM Manufacturing Service Index due out at 9 again, Central Time. So this morning, sitting down looking at the charts, equities were pretty much higher. We put in another new all-time high in the extended trading hour session in the S&Ps before the number came out. We've seen a lot of knee-jerking going on. This unemployment numbers, it's not only just a finger on the pulse of the economy. The FOMC, the Fed is watching this and trying to figure out the proper time or the right time to begin the reduction of bond purchases. This number I would expect will be a little bit of a surprise to them if they didn't already know, and may perhaps delay the beginning of some of those buybacks. Crude prices up above $70. Apparently, Hurricane Ida did a little bit more damage to production in the Gulf than they were initially expecting. We saw a pretty big move to the upside, closing above weekly kickoff high. So it looks like the damage is a little deeper than originally thought. We're going to have to see how all of this plays out in the markets, and it does offer us opportunities. Make sure that you hit the lucky like button. Make sure you share, comment, question, feedback, and heckling are welcome at will. Make sure you subscribe to our YouTube channel so you get notified when we do go live. If this is your first trip to the market forecast, welcome. Hoping you will find some useful information in what we talk about here this morning. And it's Friday, so I know that most of the time, if I'm up some good money on early on a Friday, I'm probably going to close it down and finish what I have to do and enjoy the weekend. It is Labor Day weekend this weekend here in the U.S. Markets, for all intents and purposes, will be closed on Monday. I am authorizing all of you to take the day off on Monday. Don't worry about the markets. They'll still be here on Tuesday. And speaking of Tuesday, that's when we start the Futures 101. We'll be letting you know and giving you the link at the forecast on Tuesday morning. Tuesday, we're going to be talking about the beginnings of futures trading, how it started, why it started, when it started, and how we all ended up doing this thing that we love to do, and how we have that opportunity to make money at it. Taking a look this morning at the VIX. VIX was actually lower after the number came out, $16.28 index, down pretty good this morning here at 92.19, and the 10-year yield had a pretty good jump after the after the non-farm payrolls numbers and the unemployment numbers up at 1.32%. Gotta say hello to everybody. Brett, you are the first in the room. You win the prize. Brian, Theo, always a pleasure to see you. Dead letter opener, George, Janus, Clarence, Tone, George, best trader community in the world. Yeah, pretty decent knee jerk to the upside in gold there this morning, wasn't it? Cesar, Tim, John, Bill, Jason, PD Legend, good morning. Zorain, Cameron, Wright, happy Friday to you as well. Level 2 did pretty well, looking for an early day. Good, nice job. Lovely technical trade this morning. Andres, Laura, good morning. Fred, question for Oak. Do you think crude oil could have gotten do you think crude oil could have gone from too short following Wednesday's liquidating break to too long during Thursday's early rally? Well, we'll take a look at that, Fred. NMLO, good morning. Ednelson, Vince, Michael, Vlad. Yeah, Monday off. Don't get chopped up in this crazy rangy extremes. Absolutely. Good dead letter opener. Looking great today, Mr. Oakland. Hey, it's Friday. It's casual Friday. So, I've just got my hat on and maybe a little lettuce sticking out the sides there. But, hey, it's Friday, casual Friday. Juan, good morning. Sometimes I win the prize. Someday I will win the prize. Got it. You will. Robert S., Luis, and Michael H. Can't wait for Futures 101. Thanks. Hey, awesome. Well, I hope that you, number one, enjoy them and that there's some good information we can all take with us. So, I think we've got all our business taken care of. It's Friday. Let's jump into the charts and see what we see. Starting with the daily and crude. No particular order, just going left to right. Everybody knows the rules. One bite each. All right. So, yes, IDA creates a little technical upside space. Volume was pretty good yesterday, adding 19,000 in open interest yesterday on this, actually a close above an important inflection level. Our inflection level supportive for us last night. Let's see what it looks like this morning. Volume and open interest are indicating health in the auction process to the upside, at least for now. So Fred is talking about, did we get too short down here, and are we getting too long from yesterday? It's a good question, Fred. I think that there's some pretty decent money out there on the sidelines. So here's Fred's question is, did we get too short down here? It really kind of looks like it. We were looking at this as a triangle formation on the 30-minute chart. This was Sunday's range, which basically was until our move to the downside yesterday, the high and the low for the week. Well, we expanded the low for the week on Thursday. Obviously, that was pretty swiftly rejected. We go from triangle to bull flag. We break out the bull flag yesterday. We get this move to the upside. It comes off pretty good, but we do settle above that weekly kickoff line there, that weekly kickoff level, 69.80. Last night it was pretty supportive. So far this morning, we're opening in range and in value. So do we think that we may have gotten a little bit too long up here? It's entirely possible. But, Fred, what I'm thinking is with the volume that we brought in yesterday, okay, it wasn't tremendous. It's a little bit off from what it was on Thursday on the move to the downside, but we did bring in new business. That's what we're looking for in this regard, is bringing in new business. If old business is long and we bring in new business to the upside, sometimes buying begets buying. Right? So I'm thinking, it's a pretty decent move to the upside. We had some pullbacks going back to the daily here. So we had a 10% move here. We've really, I think, spent some decent time in this consolidation area in this bull flag to even out inventory, and I think we've got plenty of guns to go to the upside if that is indeed what we are going to do. Looking at the 30-minute chart, we're opening, above settlement. I don't see that we have any real scary overnight longs in this market. We're opening in range and value, indicating that, at least for now, the perception of value of a barrel of crude oil hasn't changed that much. So where I'm going to be focusing I think the majority of my opportunities today is going to be at the weekly kickoff high here, 69.80. If we can get down there and we can't accept below it, then I think we start to move to the upside. If we even get that opportunity, Fred, we may not get the opportunity to see price down at that level. So we're going to try and stay patient. We're going to try and find good trade location as the day goes on, because again, we're in range, in value, basically trading yesterday's point of control. That's the fairest price, basically, of the session from yesterday. So I don't really want to do much here. I'm looking more for some fish down here and perhaps possibly for some fish near the high of value from yesterday in either direction. If we break out and continue the move to the upside off the high here, that's going to be a tough one to try and get into because it's going to be hard to limit risk. So value high is basically, because we opened in value, is an opportunity for a short, and it gives us that opportunity to limit risk. If it doesn't work and we start driving higher, that's my concern, is if we've brought in new business to the upside, new buyers, and they remain in the marketplace, there's plenty of space on this daily chart to move higher. Now look at what we have here. We have basically a inverted head and shoulders. So if we were to take a look at the neckline here, which we broke out of yesterday, and to the top or to the bottom of the head, and then if we were to take that distance, so here's our neckline, here's basically our neckline here. So we're going to take this and we're going to measure the distance. Oh, hang on a second here. I'm going to measure the distance from the neckline, which is basically here. This thing is fighting with me. Vertical, here we go. So from the neckline to the bottom of the head. If we break out the neckline in the other direction, in essence, Fred, that takes us all the way up to $77. It's a pretty substantial move. But because of the way this inverted head and shoulders has presented itself, it's a pretty deep dive here. We start at the neckline to the bottom of the head in this case. If it were a regular head and shoulders, we'd go the other way. But once we break out the neckline on the other, after the other shoulder is established, that's the target for this move. If this continues to work itself as a head and shoulders, from the neckline to the top of the head, from the break of the neckline, you measure that, and that's how far this thing could feasibly go if it follows the head and shoulders rules, if there are such a thing. But that's what makes me think there's still some pretty decent room to the upside, Fred. It's a very, very good question. Moving on to the S&Ps now. Okay, we got another all-time high in the extended trading hour session. Weekly kickoff high is certainly in play here. For 45.40 is that level. We settled at 45.35 and a quarter, so we have not yet shown many signs of acceptance above that level, other than the fact that we added 25,000 in open interest yesterday. Volume wasn't great, and typically volume isn't great in the S&P futures when the market continues to roll to the upside. It's when we get to the downside when everybody jumps in. So we've got our weekly kickoff high here that is certainly in play. Volume was Relatively weak yesterday, but that doesn't worry me. The open interest increase I'm looking at as a relative positive to the health of the auction moving this market higher. 30-minute chart, settlement just below our weekly kickoff, unable to close above it. Settlement 45.35 quarter again. Put that on your charts. Pretty much range bound here. We are in rollover. I saw a question: when do we switch to the December contract? Switch day is going to be Thursday. Typically, I'm going to switch the day after switch day from the September to the December contract. We'll be watching volume and letting know as we get closer and closer to when the switch is going to be, but typically the day after switch day is when the bulk of the volume moves to the new front month. Okay. All right. So here's the 30-minute chart. We had pretty knee-jerky reaction here, right? If you were watching your domes, especially like in the Nasdaq, there was a lot of space between bids and offers. There was a very illiquid few moments there that created this big knee-jerk reaction, which basically kind of ended where it began, weekly kickoff level. We're going to be watching this. This is going to be a pivotal area for us today, this 45.40. We traded up to it yesterday. We traded up through it last night to put in a new all-time high and another new all-time high after the number. Don't forget, these markets don't like to leave all-time highs in the extended trading hours session. So that's going to be a visual target. If we can't hold above weekly kickoff low, we may forsake that for a little while and go back down and take care of perhaps some unfinished business down below. Okay, look how range bound we've been. Monday, Tuesday, Wednesday, Thursday. Range bound, range bound. And we're in rollover. That tends to keep the market range bound as well. We had some conversation in group coaching, and I think as well as in the market forecast, as to how the rollover affects markets. And it keeps your bigger, stronger money working on getting a cheap rollover above trying to get directional in any of these equities markets. So again, here we are. We're going to be opening in range and in value near an important inflection level. I'm going to suggest trying to stay patient. Stay patient. The value of the S&P has shown very little change in the overnight. Yeah, there was a knee jerk. We have new information. How are investors and traders going to digest that information, and what direction, if any, are they going to go? Remembering we're in rollover, I'm going to stay patient in the equities, and that does include the Nasdaq as well. Okay, it's still rollover range bound. Just take a look at it. It's very indecisive. These bars are mostly all shadow, not body. There's just a very indecisive market right now. We only lost 700 in open interest yesterday. Volume actually held up pretty well, even though there's absolutely no direction in this market for the last 4 sessions. Range rules. The range rules are when we approach the extreme of a balance, we're fading that extreme. We're selling up against the high of balance. We're buying down against the low of balance, expecting perhaps a move back to the center of the balance. That can pay us handsomely over and over again. But once there's acceptance outside the area of balance, we want to go with that breakout. Whether that breakout is to the upside or to the downside is of no matter. It's noticing and catching the acceptance outside of the range that's going to pay you. Another knee jerk here today, and in the equities, this all happened probably in about 2 seconds, or maybe 2 minutes. But regardless, it's nothing that I like to mess with. Look where we are. We're going to probably open lower now in the Nasdaq, but we're still in range. We're still in value. We have no overnight inventory. We have no runs, no hits, no errors, nobody left. Patience. If we approach the bottom end of this area of balance, there'll be fish there direction unknown. We approach this end of the balance. There'll be fish here. Direction again unknown. We have not yet had the opportunity to see the Nasdaq trade to weekly kickoff high yet. It's presenting actually a little bit weaker than the S&Ps all of a sudden this week, but again range bound and rollover contingent. Gold. All right, so volume and open interest slowed yesterday. We lost 500 in open interest, just an almost moot number. But we keep stacking up bull flag over bull flag, and looks like we are certainly having the opportunity to accept above this trend line here on this bull flag. It's a rather weak trend line, but it's still showing that we were putting in lower highs and lower lows in okay parts to create this bull flag that we've broken out above. Short time frame control is what we're looking at inside of here. On this move above, we're looking for new business to come in and continue this market's move to the upside. Here's the knee jerk after the number. Here's our bull flag, the breakout, continuation, target, weekly kickoff high, 1839. Okay, settlement is down here. It's one of the only markets that we really had a kind of an overnight inventory with which to worry about. The market opened. You can see if it had necessarily had a gap here, but it did not accept inside range and value from yesterday. The number came out and kaplowy, if that's an adverb, there it goes. So if you didn't get on this, don't sweat it. There's going to be more opportunities. Looking at this daily chart, and we've got these swing highs up here that largely represent the weekly kickoff high. And if those don't hold, we see some dollar weakness. We see some other things happening. There's a lot of space above this weekly kickoff high. So I'm looking forward to having a test of that level at some point in the coming days and weeks. The euro already broken out above that important inflection level. What did we do as far as open interest yesterday? We lost a little bit. Lost 250 in open interest on lower volume. It's kind of indicating that this short time frame upside auction may be tiring a little bit, but the news coming out this morning, the dollar coming off of recent highs, has the euro and the currencies with a little kind of a bounce in their step here this morning. We've got August swing highs with which to deal with visually, and it looks like we are getting pretty close to an opportunity to see how the market responds up there. Take a look at the 30-minute chart. So here's the knee jerk as well. We got a couple of naked points of control up here with which to contend with. Those should be pretty close to those August swing highs that we're talking about. So we do have some visuals up here, and if traders have eyes on these naked points of control, they will bring price to it. The tricky part is getting into the already underway directional move to the upside without buying a high and having to sweat all kinds of risk. Look for the pullbacks. Look for high volume nodes to low volume nodes. Those low volume nodes can be short-term support levels that can help us get into this upside move. We don't know if it's going to continue. We don't know how it's going to continue. Just be cautious, be patient. Something will come to you. And for our 10-year, you get a pretty good jerk to the upside here in rates as this number came out. Obviously, the market knee-jerked in both directions and has started to settle right back into the center of the weekly kickoff range. I still believe that this market is largely short time frame controlled. We lost 4,300 in open interest on very low volume yesterday. This market is just killing volume. Of course, we're going to see a little more volume today with what happened with the 730 numbers. But again, no real change in direction, in thought, in idea for me in the 10-year. It just looks like it's still very short time frame controlled and indecisive. Well, of course it is. Everybody's waiting for when they're going to stop the bond buyback program, or at least slow it down, of course. Wow, what a big knee jerk in both directions. Now started to heading lower as rates continue to move higher. But I still kind of feel as though this market is short time frame controlled. I mean, yeah, there's a big knee jerk both directions. A lot of people probably got ripped up in this, only to have price come back to range, back to value, and back to the short time frame balance that it's been in for the last few sessions. Patience. Patience is your friend when it comes to trading. So we got a couple of minutes left here. All right, Crude's taking a look at the 69.80 weekly kickoff level now. I'm going to take a quick look here. Yes. Oh, yes, it is. Oh, yes, it is. There might be some fish here. There might be some fish here. At the very least, Fred, we can limit risk. We've also got our 50-session exponential moving average on the 30-minute chart right there. Take a quick look. So here's that weekly kickoff level. Here's the 50-session exponential moving average. Little convergence here. Looks like an interesting spot. One way or another, I see fish. All right. Okay. Mr. Shine for the journey. Good afternoon. Good morning, Journey, I should say. Stacking Bananas. Good morning, Spencer. Yes. Just heard John say it needed to go explore the basement. Fishing with tater tots. You know what? I'll bet you that would work. I bet you that would work. Dead letter opener. Good to see you. Ocean Blue. I'm glad. I'm glad you find that the information is clear. You know, we've been adding more and more information over time. And any questions, let us know. And if, you know, of course, you can always come to the group coaching. We have Futures 101 beginning next week, so that's going to be a lot of fun. Looking forward to spending more time with all of you. All right, on that note, let's take our deep breath. Stay humble, grateful, and creative. You know, this is our job, is to find opportunities for us to make money in price action and price changes. Go get them. This weekend, make sure you say a prayer for world peace and for everybody who's not where they want to be. Victims of Ida and all the way into the East Coast. I guess that storm has really just caused a ruckus. Say a prayer for all of us. Get out there and profit today. Trade well. I'll see you in the pits in a little bit. Have a great day.